Foreign exchange trading, and also known as Forex or FX trading, involves the buying and selling of currencies on foreign exchange markets with the aim of making profits. The Forex market is the largest and most liquid financial market in the world, with trillions of dollars traded daily. Welcome to Business Point. On Global Television, it's a program that extracts the Nigerian economy and government policies. I am your host, Kikelomo Okere. Today, we will be looking at Forex crisis, necessity of strengthening the Naira. As we all know, Nigerian foreign exchange market has been under significant pressure recently, leading to a depreciation of Naira and concern about economic stability. The Naira recent depreciation has been attributed to a combination of factors, including increased demand for dollars, rising inflation, and concern about the global economic outlook. To address these challenges and stabilize the exchange rate, the Central Bank of Nigeria has implemented various measures, including raising interest rates and restricting access to foreign exchange. However, the effectiveness of these measures remains to be unseen. The Forex crisis and high inflation in the country has limited the performance of many industries in Nigeria. Despite these challenges, the Nigerian Forex market offers opportunities for investors to diversify their portfolio and potentially generate high returns. It is important for participants in the Nigerian Forex market to understand the regulatory environment, market dynamics, and risk management strategies to navigate the market. However, the Central Bank of Nigeria has released draft guidelines aimed at strengthening the regulations of bureau de change operations in the country, including increment in capital requirements. The Apex Bank has since come up with several means to correct the volatility and arbitrage, such as reversal of dollar-for-dollar policy, the International Oil Company repatriation of only 50% proceeds, ban on crypto platforms. The most recent is the revised regulatory and supervisory guidelines for bureau de change operations in Nigeria exposure drafts. We will take a short break now. When we return, we will be discussing fixing the Forex crisis in Nigeria, the necessity of strengthening the Naira. We will be back. Don't go away. Welcome back. If you're just joining us, this is Business Point, where we extract the government policies on Nigerian economy. Today, we'll be discussing fixing the Forex crisis in Nigeria, the necessity of strengthening the Naira. With me is an economist analyst, Okudili Egu. He is the Senior Vice President, Kauri Asset Management Limited. You're welcome on the show, sir.
Thanks for having me.
Thank you very, very much. Sir, the Naira official exchange rate has been drifting towards the parallel market as the central bank has cleared the outstanding backlog. Now, what is the issue now? Is it still the backlog that is affecting the dollar or the Naira from appreciating?
Well, you need to take into consideration what are the factors that may have led to where we are. So what we are seeing is the outcome of several policy actions, activities that have happened in the past.
Wow.
That came to where we are now. So the fact is, yes, there's a convergence. We now have almost the same price between the exchange window and the parallel market. But how did we get here? So 8 years ago, we had multiple exchange rates. We had more than 5 exchange rates within the system. We had more than 5 exchange rates within the system, and that was not held. So this administration came in and said, no, we can't have an exchange rate that is at very completely divergent from the parallel market. The official exchange rate was, so we had an exchange rate that was officially at 450 and the parallel market was in about 800. Yeah. And then we had multiple exchange windows, and there was also the inability of the CBN to meet with genuine demands for FX. So this administration came in and said, we don't want this mess. We want to clear all the backlogs. We want to bring reforms into the economy. And they brought up a reform. I unified the exchange rates. So they dismantled the different 5 exchange rates regimes that we had and brought all of them into one. That unification led to implicit devaluation of the Naira. But why did they do that? They had to do that because the Naira was obviously overvalued. Nigeria had low revenue base. At some point, our revenue to debt servicing was over 100%. Our revenue to debt servicing was over 100%. The revenue base was also very low. Now we had currency speculators who were now buying dollars because it was artificially low. So there was a racketeering at the CBN. So people can borrow in Naira, go to the exchange, official exchange window using who they know to buy at 450 and come back and sell to the private market at about 800. So there was a lot of currency speculation and racketeering that was happening in that sector. Now also had over-reliance on one single source of FX, which was the crude oil sec. Yeah. So the entire country relied on just one product. Also, that product that was the major revenue source for us, the major FX source for the country, was also challenged. Now, take a look at it. At 2005, crude oil production in Nigeria was 2.5 million barrels per day. Yeah. As at 2023, it dropped to about 700 barrels per day, 700,000 barrels per day, all as a result of low investment in the oil and gas sector, and then increased bunkering and oil theft. So Nigeria was not benefiting from the Russia-Ukraine crisis that spiked up crude oil prices because we were not producing enough. Even what we were producing was already mortgaged to service loans that had been collected. So our reliance on just one foreign FX source was also a problem. So we also had all manner of people coming in to use illicit avenues to siphon money out of the country. You realize that the National Security Advisor has been having a running battle with crypto peer-to-peer networks. Yeah. So because those are avenues where money could easily be flown outside the country through illicit means, not through the official windows, no documentation, no track. no records. So those could be for monies that are living here through corruption proceeds, and to also fund terrorism and war here and there. So those were the factors that led to where we are. So the government didn't have an option. And this government also came from day one and said, we are going to be market-driven. When you are market-driven, means you are subjecting yourself to forces of demand and supply. You know, so they are saying, we are not going to subsidize anybody. We're not going to be like the old administration that were, even when the cost of funds, inflation were as high as 23%, they were still lending money to intervene in various sectors at 9, 10, 11%, single digits. So though we are on unrealistic subsidies, you know, that helped worsen the problem, you know, and the climax of it all, that we also didn't have the FX base, the reserve base, the foreign reserve base to support the currency.
Okay, talking about that foreign reserve base, how best do you think the BDC can be well regulated? Because the way it is now, the market, the price on the parallel market is different from the one from CBN. So how do we manage this?
Like I said earlier, that there is a convergence now. The official window is about 450.
No, as at this morning, it is 1,515 naira.
Official.
Official this morning.
Then it is even higher than the parallel market, because the parallel market is doing about 1,465. 400. I saw my source told me 1,460. So you now see that the official exchange window, there's a convergence. It's almost the same, and it's even more higher at the official window. So there's an incentive for people to go and now do transactions in the official window. You just brought in one aspect of the market, which is the BDC market.
Yes, sir.
Now, who does the BDC market serve? What segments of the Nigerian public do they serve? The segment they serve and their share of the FX market is not up to 5%. So it is not a significant factor. Where we should be worried about, do we have enough foreign FX supply to support the level of importation that can drive growth? That's what you should be looking at. So the BDC is for me, is not a significant player. What we should be worried about, how do we increase the supply of FX? So what are the factors that will lead to increase our supply of FX?
Okay.
Number one, you increase our level of export. So we can't rely on oil. Even if it is the oil, can we increase the oil production capabilities? How can we, in 2024, be producing 1.3 million barrels per day? A drop from a peak of 2.5. So what has happened to the oil and gas sector? Why are we not producing more? So the Nigerian LNG has shown that it's a very profitable venture. How are we not having multiple ventures like the Nigerian LNG so that we can earn more? So why are we not increasing the value chain so that we can produce more raw materials, more processed goods that we can export to the global world? So what has happened to our cocoa processing? What has happened to our palm oil? What has happened to the solid minerals that this country is blessed with? And it might interest you to know that most of the banditry and insurgencies we have in the country is centered around illegal mining activities. So I'm very impressed that last week there was a lithium processing plant that was established in Nasarawa State. So that's the kind of ventures we should promote to ensure that we have more export. Then Nigeria should look inward and say, what are those impediments, hurdles that is preventing genuine export of goods and services out of this country? Why will it cost me so much to take goods from, let's take for instance cashew nut that is very well produced in Kogi State? How long does it take me to take cashew nuts from Kogi State to Apapa Wharf? How many roadblocks will that truck encounter? How many local government staffs and revenue agents will it encounter before it gets to
the final destination?
Gets to the port for exports. So we are not yet ready for exports. So we need to address those infrastructure challenges that is mitigating against export of goods and services. So until we export more, the FX reserve will be challenged. Also, one of the major sources of FX revenue or FX sources that can improve the reserve is when we have foreign direct investments. Foreign direct investment is different from foreign portfolio investments. Foreign direct investment is investment in the long term, investment in long-term production. Foreign portfolio investment is hot money, but foreign investment is a patient money that can come, bring a new capital for companies to set up manufacturing concern, for companies to set up processing activities or mining activities in the country. But are they coming? Why are they no longer coming? Why are manufacturing concerns in Nigeria shutting down and leaving Nigeria?
Okay, before we go, how can Nigeria significantly boost the manufacturing sector in Nigeria to drive the foreign exchange earning?
Well, it's to address the challenges that is mitigating against the manufacturing concerns. Number one is power. Cost of production. Until your cost of production is so low that you can compete or you have a competitive advantage, there's no hope for the manufacturing sector. So we address the issues confronting the manufacturing sector. What will make their cost of production lower? Is it taxation? Do you want to give them tax incentives? Do you want to put them in a cluster and provide them infrastructural amenities that can aid their production activities and lower their costs? So that's the challenge of the manufacturing sector.
All right, thank you so much for coming. Really appreciate this discussion. We are really happy. Thank you for coming.
You're welcome.
All right, we'll take a quick break now. We'll be right back. Don't go away. All right, moving on, let's take a quick look at the exchange rate. The dollar stabilized against other currencies while the Naira remained close to its lowest point since 20th of March 2024. The Naira touched a 7-week low over the weekend, trading at 1,466 Naira to a dollar at the official window and 1,459 Naira per dollar at the parallel market. The CBN is presently under pressure to hike interest rates to accelerate stability in Nigerian foreign exchange markets amid weak oil output and recent payments of FX liabilities. Market fundamental indicates that it is unlikely that the Naira will hit the February low, at least not this month. As traders await the outcome of the CBN's MPC meeting, the CBN intensified effort this year to stabilize the Naira's exchange rate volatility, which caused the Naira to appreciate steadily against the dollar from roughly 1,912 Naira per dollar in late February to below 1,000 Naira per dollar in April, and has now plunged back to 1,450 Naira per dollar. To address these challenges, multi-pronged approach is necessary, encompassing measures to boost domestic production, enhance market confidence, and implement sound fiscal and monetary policies. Nigerians are of the opinion that crucial steps towards alleviating the forex demand is to enhance domestic production, particularly the petroleum sector. This involves enabling private and public refineries to operate at full capacity, reducing reliance on imported petroleum products. Now let's take a look at the stock exchange. The Nigerian Exchange Group PLC realized 6.959 billion naira from transaction fee and treasury investment income in 2023 financial year ended 31st of December 2023. This was contained in the Group 2023 annual financial report. The amount represents 34.19% growth over 5.187 billion naira reported in 2022 by the group. Also cumulatively account for 83.85% of the total revenue of 8.299 billion naira. Further check shows that the key driver for the group revenue in 2023 financial year emanated from the transaction fee, accounting for 4.818 billion naira as against 3.157 naira reported in the year. All right, this is where we draw the curtain on business points. Join me again tomorrow on this same station. I am your host, Kike Lomo Okeri. Thanks for staying with us.